Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tiggre. Our victim of the day is Brian Ostroff, CEO of Arianne Phosphate. And he's smiling, that's good, because we've got questions for him. Brian, unlike most of our guests, is not a gold guy or a metal miner. He's a phosphate miner, or wants to be. And that's interesting because fertilizer prices have ticked up recently. So it seemed timely to talk to Brian. So Brian, why don't you tell us a little bit about the market since you're an expert, and then we'll get into your company.
Great. Well, thank you for having me on your show. So, Arianne Phosphate, as the name suggests, we are a phosphate player. As your listeners probably know, phosphate is one of the three macronutrients in fertilizer, potash and nitrogen being the other two. My experience has been that because all three elements are in fertilizer, I think that the average investor doesn't really look much beyond that and thinks they're the same. And at the end of the day, they're not. Sure, the pricing kind of rhymes. They tend to trend together, but they really are separate, and they have their own supply-demand dynamics. And so when looking at the three, as far as I sit, phosphate is compelling. Potash, there's quite a bit of potash around. Nitrogen can be made, but when you look at phosphate and the supply-demand dynamics, look, North America runs a deficit, South America, Western Europe, most of Asia. And so by and large, this world is in deficit, and that deficit gets made up by the Middle East and North Africa. So Morocco is the largest player. They're huge. They're 4 times bigger in phosphate than Saudi Arabia is in oil. Tunisia used to be number 2, but Arab Spring has set back that industry there that it really hasn't recovered from. Syria, Egypt, Algeria. Today, Jordan's the second largest producer for the export market. And so as you take a look at phosphate, you need to understand where it comes from. And look, as I'm sure your fertilizer guys know, the beautiful thing about something like a phosphate is demand grows every single year. It doesn't matter whether the economy is doing well or not well, or a 2008 shock comes along, demand's going to grow. And if you don't have more supply come on stream, then ultimately we're going to have a problem, and that's where the phosphate market stands. Yeah, not sexy.
Yeah, I understand. Let me jump in there and let's clarify. Demand is going to grow. There's inescapable logic for that. The population grows. People want to eat. So, of course, demand is going to grow. But the price doesn't always grow, as we know, as we've seen over the last few years. And certainly there's times when the global economy goes slower, and that seems to directly impact prices. So we have seen a price uptick. That's why we're having this conversation. But there's also signs of slowing growth on the global economy. The ECB has cut its growth forecast. Is this a concern, or why not?
So again, from where I sit, it's not a huge concern when you look at the fertilizer component. And I would say this, that although you can make the argument that prices will kind of go with the economy, I would actually say that prices really go with ag as a whole. And so, what is interesting, and I'm sure your listeners and viewers understand. Look, if you take a look at most commodities, most commodities after things kind of turned down, really have come back to varying degrees. I mean, precious metals have, yeah, exactly. Battery metals, what have you. The one area that really hasn't had much of a bounce yet has been the ag sector. And what I find curious, and definitely something to ponder, is for all of it, farmers aren't making much money. And logic would dictate that the crop prices go up first, corn, wheat, beans, and then the farmer has more money and he can pay more for fertilizer. What has turned this on its head and really makes me very bullish is, as you had said, in 2018, fertilizer prices went up, but grain prices didn't. And so how is it that grain prices didn't go up, but the farmer is willing to pay more for the ferts? And the answer to me is it's supply and demand. So from 2012 to 2017, the fert market just stunk. And there's no pun in there, but so ultimately, prices move down, and when prices move down, look, what's the cure to a low commodity price? A low commodity price. Projects got mothballed. We'll talk about Arianne in a moment, but it's really one of the few projects that move forward. And so no expansion, no anything. 5-6 years later, you need all this additional phosphate. It's not around. Supply is a little tighter than I think maybe people had thought, and now you have to pay more, even though your corn prices and bean prices aren't really any higher.
Okay. Well, suppose you're right, and we do see more demand leading to projects going forward. Why can't the big boys like the guys in Morocco just ramp up their production and meet all that demand? Like, what room is there for new players when there's such big players in there already in production?
So I'd answer that really on two levels. So level number one is the business is such that you have the phosphate concentrate, that's what Arianne has, and the Moroccans and a bunch of other people. But 85% of all phosphate mines are owned by the guys who do the downstream. So they'll make the fertilizer or the phosphoric acid. And again, that's 85%. And really that's to capture the margin. You have a guy, he sells wool $50 to the suit maker, costs the suit maker $25, sells it to his wholesaler for $2.75, and he put the money in his pocket. One day the guy with the wool said, hang on a second, I've got the wool. And so you're seeing that in the phosphate business. The guys who have the phosphate rock are looking to capture the margin. And so, the Moroccans, who are big players in rock, are going downstream. Saudi Arabia is the second largest phosphate player, but they don't sell any phosphate concentrate. So you have guys out there who need phosphate concentrate to feed their fertilizer factories. And if you look, yes, the supply is coming online, but Arianne's is really the only independent supply looking to come on. So if you look out a few years, I think 90% is going to be integrated, but that doesn't change the fact that Nutrien has to import, and Israel Chemicals heading into a deficit, and all these big, so there's going to be demand. The other thing, of course, that you touch on is price. And so we are competitive in terms of price. We make a high purity phosphate. It sells at a premium price. And as part of the work that we've done for the banks, we've had guys come in, big global commodity consultancy firms, and they've placed us at the bottom decile on the cost curve. So we can compete.
Right. And just to be clear, this isn't like spot gold or copper. Copper from one place is like copper for another. There are different kinds of phos rock, and they do command different prices in the market. Is that right?
That is 100% correct. And look, I guess maybe the world would be easier if all phosphate traded at the same price. But for Arianne, I'm happy that they don't. Most of the world's phosphate comes from sedimentary deposit. There's a lot of bad stuff in there, radioactive elements, heavy metals.
I was going to ask about that. Actually, let's cue in on that. Could this actually be a tailwind for you? There's been talk about getting the UN involved on the anti-proliferation front. People are concerned that places like Syria and Egypt have Morocco, maybe not quite so much, but still nearby, that places near places where people would worry about nuclear proliferation have this potential source of uranium. There's uranium in these sedimentary phosphate deposits. It's very dilute, but it could be extracted. Could that possibly be a damper on your competition, or is this just all hype and nothing is actually really happening?
I guess what I would say is that, look, yeah, most of these sedimentary deposits, and to be clear, sedimentary deposits make up over 90% of all phosphate that's produced, comes from sedimentary deposits. And so basically, yeah, they have radioactive elements, uranium, thorium. The stuff in Florida has a lot of radon. Look, it depends on the nature of the deposit as to how much, for example, uranium, and then can you process it, what have you. Ironically, the biggest concern for phosphate and these types of deposits, believe it or not, is not the radioactive elements, because in a way that it's easy to deal with. You can extract it. To your point, you should then be concerned what happens to it, but it's relatively easy to take out during the process of making your fertilizer. What is more challenging is the heavy metals. So cadmium, for example, is hard to take out. Not hard, expensive, which means most people choose not to do it. And that's a big problem. And it's such a big problem that the European Union recently passed legislation that will limit the amount of cadmium in the phosphate that comes into the EU. And for us, that's really good. First of all, it's good environmentally. Everyone should applaud these efforts. But of course, beyond that, our deposit doesn't have cadmium and would then be exempt from these restrictions in the EU and arguably increased demand. And of course, again, lends to our phosphate trades at premium prices, and that's
a natural segue. Why don't you go ahead and tell us about Arianne's project and what you're working on in the company, and then we'll have some questions about that too.
Great. So Arianne, we have a large project. It's in Canada, province of Quebec. I'm sure your viewers are quite familiar with Quebec. It's a wonderful jurisdiction. The province has been very supportive of our efforts. So the project is extremely well placed in that it was at least far enough from a population center so that from social acceptability, environmental, we were fine, but not all that far north in the province, and the infrastructure that's required by and large exists. So there's a power dam, hydroelectric, that is 30 kilometers away. We've contracted for our life of mine supply. There's a couple of oversized haul roads that right now are carrying big timber trucks. So we have our road access and the ability to truck. Road goes right down to the Saguenay River, which empties into the St. Lawrence. Year-round shipping. Rio Tinto has big ships coming up and down there, bringing in their alumina and bauxite. So from an infrastructure perspective, we are in very good shape. And so the project really over the last few years, like any other project, just kind of moved forward. Drilling got bigger, metallurgy, scoping, pre-feas, feasibility, and we've gone through all of that. And we put out our feasibility study in 2013. We can go into a little bit more detail as you like. From there, the project continued to advance. So today we are sitting on the world's single largest greenfield phosphate deposit. We have well over a billion tons when considering our measured and indicated, proven probable, and our inferred resource. And so the project moved forward, and today it's fully permitted. So you've got a large scale mine. It's going to do 3 million tons a year. The feasibility showed that at 26 years. As I say, we have done more drilling, and that would imply that we have many more years beyond on the 26 years.
Okay. Well, it sounds pretty exciting, but the first thing that jumps out from that is feasibility study in 2013, and you've drilled more. You have a new resource that's bigger than in the study. But that's 6 years ago. Would those numbers, the engineering, would that even hold? Or would you need to, if you got the money to build it, would you need to then go back and do a new feasibility study, or can you still use that one?
So a lot of work has been done since the 2013. So, for example, we did do more drilling. As a result of that, our resource got bigger. As you know, mining is really an economies of scale game. And as this got bigger and the potential pit got bigger, we were able to show our costs coming down. So in the original feasibility study, this was at 94. That number is now down to 79, and look, we feel pretty comfortable that number can continue to come down. And again, we produce a 39% concentrate. So the average Moroccan's about a 30%. So just so your viewers understand, we will be able to sell our phosphate today for, historically, it's averaged about a 55% premium over benchmark Moroccan. So yes, prices are down from the 2013 feasibility. I'd say that on average, they're probably down 50, 55, $60, but we've taken our costs down a fair amount as well. The other thing that's actually helped us is when that feasibility was done, the Canadian US was 105, and today we're sitting at 133. So we're in a good place, and all of this work and additional work has been done. So one of the things that I'm not entirely certain that the market has understood is over the last 5-6 years, where the industry has turned down and many projects stopped, mothballed, what have you, Arianne continued to move forward. And a lot of work towards the financing has been done. And one of those things, especially when you're going to the banks looking for a very large debt package, is the banks have come in and they've done their work and they've engaged their independent engineers. And so all of this work has been done, checked, rechecked, modified, and to really make it consistent with today's pricing. And so, we know that at this point, given how much due diligence has been done, there's no fatal flaws that have been found by any of these groups. Our economics continue to be robust. And we have a lot of interest on the part of the big project finance banks and the export credit.
Let's come back to that before we move on from the cost to the finance, and that is a question I want to ask about. So just to be clear for our viewers out there, if they were to look up phosphate prices now and look up a chart, they'd see prices that look like they've been chopped in half over the last few years. And they've rebounded a bit. We're still about half. And the reason why you're saying that you think your margins are still robust is because, one, your rock isn't the average rock. You have a different price that typically commands a higher premium, and you've cut your costs. You've made your project larger, and you've cut your costs since the 2013 feasibility study. Is that an accurate summary?
That is an accurate summary. And so just so your viewers understand, this premium price, you can look at it really, what drives the price. So you pay for content. So if Moroccan benchmark, let's say, is basically 30%, and I produce a 39%, I basically have 30% more phosphate per content. So I get paid for that as well. The process is you take that phosphate and you mix it with sulfuric acid and you generate your phosphoric acid. The better the grade of your phosphate, the less sulfuric acid you require. And so particularly these days where sulfuric acid is so expensive, there is a big savings to using, the higher quality rock. And
is there a credit or a lack of a penalty, like because of the cadmium and the other stuff that isn't in there? Do you get not a credit, but I mean, are others that have the heavy earth elements, or sorry, the heavy metals in there, are they penalized and you're not, or is there?
So, certainly I think that as European legislation, as it takes hold, and look, I don't think that legislation like that's just going to stay in Europe. It's probably just a matter of time till it makes its way into North America and other markets. But the penalty is this. You have to remove the cadmium. And there are various technologies out there that are being worked on to allow for that, but there's a cost. So
it's not a price benefit, but it's a cost benefit for you. You don't have a cost that your competitors would have to bear.
Exactly. Or someone who, for example, were to buy my rock. Let's pretend it costs $10 a ton to take that cadmium out of someone else's deposit. They can just pay me $10 or pay me $8 a ton and save yourself a little bit, and you don't have to take the cadmium out of my rock. Or better yet, maybe you buy my rock and you pay a premium price and you blend it with perhaps some higher cadmium rock, but the blend gets you under the jurisdiction. And so one way or another, in essence, we will benefit straight up.
All right, so let's get to the funding now. You needed $1.2 billion to build this puppy back in 2013. I can't imagine that's gone down. How's the money looking?
So actually, based on our work, that number really has not gone up. Again, because, look, if you take a look, if the thing was done in 2013, you have a bit of lag in pricing. A lot of that stuff was done, and the pricing was 2012. Look, back then, you could buy a Caterpillar truck. You just couldn't get any tires for it. You can get the truck in 6 months. The tires take 18 months.
I remember that. I remember the tire shortage.
Yeah, the good old days. So today, that's actually not the case. So prices really have not moved up, really because of when in the cycle we were. And so our indications have the CapEx by and large at the same levels.
Okay. So you mentioned off mic when we talked before that you do have some funders stepped up, but that they want to see you arrange the offtake deals. And then, as I understand, you would have all the money you need, or would you have all the debt part and then you'd need to raise some equity for the rest? Or how do you finance this project ideally?
Correct. So look, the funding of this project is going to be made up of a big slug of debt, and that's across various tranches, senior secured, subordinated. It comes by way of project finance banks and export credit agencies. And so you would be looking at a substantial amount of debt. As well, we are in discussions with various royalty players to look at getting a royalty. And then the remaining would come from equity. So our conversations with the debt players have gone well. There's strong indications of interest, really to the amounts that we're talking about. A lot of people have put up their hands. Really, with, as you said earlier, the driver now is more on the offtake. So not to put words in the mouths of the banks, I think that the basic gist is, okay, We like the project. We certainly like the location. The numbers look good. You're on the very low end of the cost curve, so we feel comfortable that we'll get our money back. And so really now just show us that you've got some customers, and let's go forward. So that really presented itself in 2018. Let's say the first 4 or 5 months of 2018, and the emphasis of Arianne really from that point now has been to get off-takers. I think we've done a very good job. Q4 of 2018, we signed 2 offtake agreements, and there's a big takeaway from those agreements. First, of course, is marketability. You do want to show that there's interest in your project. But second, going back to our constant theme here of the premium pricing, I'd say a couple of years ago, we would get something like, well, yeah, you do make a premium rock, and yeah, premium rock trades at premium pricing, but you're going to have to break into this market, and you're going to have to compete head on with the Moroccans, and you're not getting premium pricing. And I can tell you that those agreements account for premium pricing, and every agreement and discussion that is underway right now with other off-takers, it comes at a premium price, and no one has an issue with it. And so this is, of course, supportive of our project. And
Sure. But Brian, isn't that a bit of a catch-22? If you're arranging pricing while prices are down, or if the banks want you to do offtake deals now, but prices are down, you'd rather do offtake deals later when prices are up. How do you balance that?
Great question. So one thing that we are very clear on is our offtakes are not at a fixed price. They float. So it's priced off of a benchmark plus the premiums for everything we've talked about. And so if say over the next couple of years, as this thing gets financed and built, the price of phosphate moves up, we will benefit from that.
Okay, well, that's very important.
Because of where we are on the cost curve, I would never want a fixed price. I wouldn't want a floor, because if you put in a floor, then you've got to put in a ceiling. I think that phosphate prices are very cheap. We talked earlier, India is the largest importer. It looks like China is about to go into deficit. So let me ask your viewers, you've got the world's largest population in India that already is the biggest importer, and you've got another 1.4 billion populous country that's about to go into deficit. Those 2 countries represent roughly 40% of the world's population. What's going to happen to phosphate prices? And so I would not want a fixed price, especially since because of where we are on the cost curve, I should be able to defend against lower prices. So I want to get the upside. The shareholders want to get the upside.
Fair enough.
Better pricing.
Okay, so what is left to do to get to that construction decision and shovels hitting dirt? Just these offtake deals and then the financing from the banks. Is it just a matter of finalizing the finance package, or is there any other work to do?
So, look, in terms of technical and that, we are permitted. The last kind of permitting hurdle wasn't ours to get, but I'd mentioned the Saguenay. The Port of Saguenay is already in existence. Their loading facilities are all on the south shore. We did need a loading facility on the north shore. Again, at the end of 2018, the Port of Saguenay received the environmental okay for that loading facility. So that's all in place. We've done the early go-round on our engineering, so that's in a good spot. Really, yeah, it's come down now to the financing or potential, partnership or JV on part of the asset. But yeah, it's come down to the financing, the financing package.
And so I know this is a forward-looking statement I'm asking for, but how long do you think that'll take? Would be question one.
Well, as you said, it's forward looking, so it will be in the forward. Um, so I think the banks again look and want to see a sufficient amount under contract, and depending which bank that number bounces around, but let's say on average you're kind of somewhere around 2/3. We've got a couple already in place. We are in late stage discussions with another 2 or 3 guys. If we can move those along fairly quickly, I would say that then the process is well on its way. I think with those off takes, from what my advisors and lawyers tell me, the final papering and that could take another 4 or 5 months once you've satisfied that. So I would hope, and again, as you say, it's forward looking. But I would hope that as we approach the end of the year, we'll be in a good place.
Okay. All right. I noticed looking at your financials that you had about a couple $1,000,000 left at the end of last year. Is that enough to keep the lights on and keep the schmoozing going until you land these financing packages, or are you going to need to go back to the markets for more money to advance?
Yeah. So I would say, currently we are in good shape. We can pay our bills and things are moving forward.
Sorry, just to be clear, you're not drilling right now or doing any expensive field work. It's
no,
pretty much office work right now. Right?
But by and large. So yes, I mean, look, Arianne still has a decent sized staff. We're roughly 13 or 14 people, engineers, geos, a little administrative. And so look, they're still ongoing. The other thing is, and it's something I'm sure we'll touch on a little later in this discussion, but Arianne's a bit of an orphan when it comes to the stock, the equity. Equity people don't know Arianne and maybe don't care that much. But when it comes to the fertilizer world, everyone knows Arianne. At this point, I can truly say that if there's a big fert company out there that doesn't know Arianne, shame on them, not shame on Arianne. And so, look, we have those discussions underway, and whether it's by way of offtake or perhaps something a little bit more strategic, work has to be done to support those efforts. We need to send samples. We need to have our technical people in contact with their technical people. And so aside from our basic burn, there's other initiatives underway.
Sure. Well, if you did get a royalty, for example, that would presumably include some kind of upfront payment, and that would help.
That would be, that's, look, I would say this. Today, Windermere is the largest shareholder of Arianne. Of which I'm still a partner at Windermere. On a fully diluted basis, it's in and around 19%. But outside of Windermere, I personally own about 3%. And this is stock that I've purchased.
I was going to ask you about that. One of the main things, it's one of my pet peeves, one of my things, what I do myself, and is skin in the game. So I like to invest in what I believe in. And I was going to ask you that. I mean, we're not talking about shares that were given to you as a director or something. How much of your own hard-earned cash did you put into this deal? How much skin do you have in the game?
As I say, I own today in excess of 3 million shares. I don't know the exact number, in and around 3.1. And so, look, I'm a believer. Does it mean that it's going to be successful? I mean, this is pretty damn good looking asset, and so I believe, and yeah, I'm long 3 million plus shares.
Can you say it about your average cost basis?
I would unfortunately say that at these pricings, I'm probably not making much money.
No, no, I mean,
You know,
how much did you pay? Like, what did you pay for them?
I've been all over the place. You know, when I first found this thing, I'd bought a fair amount, and that was at a lower price than where it is today. But again, with the stock probably trading in and around maybe a 4-year low, 5-year low, pretty much every purchase thereafter is above. I mean, I've definitely paid north of a dollar and a half a share.
Okay, fair enough. Well, you've been a very good sport here with my mean questions in the pit here. But that was what I wanted to hear. Anything else that you want to leave our viewers with?
Well, I was going to just basically use this as a way back to your question regarding financing. So, look, we try and be as prudent as we can with the money that we have. We stretch it out, and really because I, between myself and my fund, represent the largest shareholders, and we try and keep dilution to a minimum. And so when we do raise money, it's, you know, because it's something that has to be done. We've never done an over-the-top financing. We finance hand to mouth because we're trading at 4% of our NPV. So if I issue stock, I'm issuing a $100 bill for $4. I don't really like doing that. I understand that it's necessary to move the project along, but we do it as we you know, as we have to. You know, I guess in answering kind of your closing comments, if you will, look, I've been doing this a long time. The gray in my beard will indicate that. Today you have a project that is the largest, makes a great concentrate, arguably the best in the planet. It's in a good, safe jurisdiction. No concerns about Arab Spring happening here in Canada. It's a needed commodity. It's the world's largest greenfield deposit. It is economic. It is permitted, and it is shovel ready. And it is a $40 million Canadian market cap. I'm speechless. I'm speechless. Of course, I'm probably not the first CEO that's been on your show arguing for why his stock is so cheap. But again, you know, you look at the math, and even at today's prices in production, we should run gross profits of over 200 million US a year for a needed commodity. And so I look, I've put my money where my mouth is. I think it's compelling. We'll see how it plays out.
Okay, Brian Ostroff, thank you very much.
Thank you. Appreciate it.